Investors, the biggest news on the week, thanks to the Federal Reserve, was in regards to interest rates. And yes, that directly impacts you, whether you're just a consumer or here every single week with me as an investor. So today, I'm going to go ahead and unpack all the need-to-know economic insights and then gift you with 6 dividend stock ideas worth your attention right now. So I think it goes without saying, over the past couple of weeks or so, since our latest inflationary reading, we've been really slipping and sliding as investors tried to gauge the Federal Reserve's reaction to inflation heating right back on up. Now, as you know, or as you should know, our latest CPI report depicted inflation notching up to 3.9%, which is obviously not at all what the Federal Reserve was expecting, nor what they desired, as their goal is to get inflation all the way back down to 2%, which ultimately then set all of us up for a little bit of fun in the game of speculation as to what Jerome Powell would come out and share with us as of this past FOMC meeting. Would the Federal Reserve hike rates? Would they hold rates steady? And matter of fact, that's actually exactly what they did. They held rates steady, which wasn't necessarily the good news or the news that we all wanted to hear, but it was essentially what was expected at the end of the day, thus prompting market participants to ask the follow-up question: when will rate cuts actually come our way? To which, as it stands as of this video, we have 3 that are expected to hit us later on this year in 2024. Now, either which way, we do need to recognize that speculation is really just anybody's game. I guess what I'm really trying to say here to all of you is that inflation could remain elevated, and it's likely to do so for a longer period of time. So perhaps we could only see maybe 2, or if that, even just 1 rate cut this year. Now, how does that impact us as investors? Well, it shouldn't. If you're investing with the intent to invest and not just to gamble your money away, that means me, you, and every other average Joe out there should be investing into a business with a business owner mentality, meaning we're going to approach investing like an owner of a company, set for the long term, and of course looking for companies that have strong brand names, clean balance sheets, and good leadership teams. Which leads me now to our dividend stock picks for the week ahead based on where we are right now. So dividend stock number 1 is for the more risk-adverse investors out there, yet seeking some real dividend growth. We have United Health, ticker symbol UNH, which is the kingpin of health insurance providers in the United States. But now recently, it has been hit pretty hard from the news of the Biden healthcare task force that is set to pursue lower healthcare costs for all. Well, good luck. Moreover, in an election year, a pick like United Health is just going to struggle. All the ambiguity out there until clarity comes to all of us on who's going to be in the White House the next term, United Health is likely going to continue to experience volatility. Right now, it's down almost by 6% year to date, but the benefits here are over time. We see 610% worth of appreciation. And as for analysts, they foresee upside as well when it comes to United Health in the long term, with forecasts coming up to $599.14 per share. It's about 21% worth of upside. And while it may continue to experience some volatility, as I shared, it's quite all right to me thanks to the dividend that comes in at a lower yield of 1.52%, but with an average growth rate of 41%, and that's year over year for the last 31 years it's had a dividend streak. But for all of you out there who are perhaps looking for more growth firepower, I want you looking into Apple, ticker symbol AAPL, given it recently has been sliding from the recent challenges it's experiencing in China, especially sales. But there's also some huge news that I'm just really excited about, as recent talks have taken place between Apple and Google about the potential for a partnership for AI advancement, which in my mind just is going to be an unstoppable AI force. So why not go Apple picking right now? Well, the stock is currently trading below $180 per share at $178, which is down from the highs of around $200 per share. That's a 7% discount if you look at it that way. And zooming out, we have almost 1,000% worth of appreciation over the last decade, which in my mind, as crazy as this may sound, is actually nothing compared to what Apple could deliver through on thanks to AI in the upcoming decade. So we want to go ahead and now look at what analysts are saying as well, because they certainly are bullish. 13% worth of upside expected from here, with a forecasted share price climbing back over $200 per share at $202.24. Of course, you won't reap the biggest dividend with Apple, but it's the growth that you should really get invested into Apple for. Either which way, the dividend yield is the icing on the cake here, coming in at 0.54% of a dividend yield. That's been on a dividend streak now for the last last 11 years, while averaging about 9% worth of growth year over year for the last 10 years. Now, with more dividend growth-oriented mentions out of the way, I have 4 more dividend stocks with larger dividend yields for you coming up. But before I cover them, investors, enough is enough. I want you to take massive action right now before the big bull run later this year. Not by buying stocks just yet, but actually by subscribing to this channel for macro insights and brand new dividend stock ideas every week. Heck, with only 16% of you actually subscribed, it tells me one thing. Not enough of us are taking this whole investment to financial freedom pathway seriously. Now, while you're at it, I also want you to tap on the thumbs up button if and only if this is the content that you're actually looking for. It's helping you and providing you with value as an investor. With that, let's kick right back to it with Tyson Foods, ticker symbol TSN, which is the largest beef, chicken, and pork producer in the United States and second largest in the entire world. So talk about a moat. However, note that it's actually been depressed since COVID, really, as animal feed costs have skyrocketed, logistical costs also skyrocketed, not to mention the consumer penny pinching that's been going on. And as of a few days ago, they mentioned the hiring of migrants, which has really put Tyson right back center stage in the spotlight. But something tells me a lot of this is near-term trouble. And as I've been saying, it's bound to return as the economy actually turns around. So we have a pretty good comeback opportunity here, not overnight, but in due time with Tyson. It's currently trading for $57 per share, but it's up on the year by over 8%. And zooming out, we see 66% worth of growth over the last decade. Now, we also see smart money moves taking place. Hedge funds have been placing big bets, beefing up their portfolios. But here I am with an invested interest in Tyson for the dividend, coming in at a dividend yield of 3.4%. Now, it's been on a dividend streak for the last 32 years without reduction, and moreover, an average of 13% worth of dividend growth year over year for the last 20 years. Next up, perhaps while we're on the topic of food, let's talk McDonald's, ticker symbol MCD. No further introduction actually required, but I can tell you I'm loving it as their share price slides, currently down and trading for $284 per share on the year here. But zooming out, we see a solid 285% worth of growth and appreciation over the last decade, while analysts project over 14% worth of upside, still coming McDonald's way to $325.10 per share. Not to mention we have hedge funds who have also been loading up on this fast food king. On top of that, McDonald's has been buying back shares like crazy quite aggressively last quarter. However, if we look ahead in a good economy or even in a bad economy, flipping $1 burgers will likely continue to perform. But more importantly, divvying out the dividends is what's important. McDonald's coming in with a 2.35% dividend yield. Now, it's almost a dividend king with 47 years worth of a dividend streak and growing that dividend year over year by roughly 15%. And if McDonald's doesn't quite feed your investment appetite, I want you to keep your eyes on Medtronic, ticker symbol MDT, which is just a power player in the medical technology field, developing and manufacturing all sorts of modern day medical instruments, whether surgical, patient monitoring, or even our everyday diabetic instruments and anything there in between. Medtronic is here to stay. It's been impacted just as the United Health was, while also pinched by hospitals cutting costs. Now, yes, that's a pretty sad story, which puts us in the red over the last 3 years with a current share price here of $84 per share. Yet we see a comeback player here beginning to climb on the year, and it's set up very well to soar in the next decade. After all, 80% worth of appreciation over the last one. We also have hedge funds who have scored more than 7 million shares last quarter, and analysts that just continue to forecast more upside with Medtronic, coming up to $93.93 per share. That's roughly 11.7% worth of upside. Now, while we're on the topic of a nice investment with a nice dividend, have a look at this. We have Medtronic coming in with a 3.28% dividend yield on a solid streak here of 45 years worth of a history, and most importantly, dividend growth, 13% worth of growth year over year for the last 20 years. Next up, I want you to put all your politics aside. I want you to think about business and ask for a Mocha Choca Grande Frappe for me next time you go to Starbucks, ticker symbol SBUX, which remains beaten down, trading for just $92 per share. Yet zooming out, we can see the power of this luxury branded coffee house juggernaut, delivering shareholders with nearly 200% worth of share price appreciation over the last decade. And if you're asking yourself, well, how much more can Starbucks actually grow? Grande, venti, heck, at least one tall order for all of us shareholders, as this company is setting itself up very well, geographically speaking, with a geographic leadership structure that will be supported by global functions, whereas the effort will really be aimed at realigning Starbucks towards vast global growth, with one of the more prominent changes including Michael Conway, who has actually been with Starbucks since 2013, stepping into the picture, the newly minted role of CEO North America. And as we speak, analysts are in fact looking forward to more upside, over 16% forecasted, with a stock share price bouncing back over $100 per share to $107.61 per share. But in the meantime, you're also going to enjoy a very sweet dividend coming in at a dividend yield of 2.46%. Now, it's been on a dividend streak for the last 13 years, while also growing by a whopping 17% year over year for the last 10 years. Now, investors, there you have them. I want you to go ahead and now comment down below to let me know which one of these dividend stocks you actually own in your portfolio. If you think you have better stocks in mind, definitely go ahead and comment down below, or just comment your game plan for the week ahead. But now also be sure you're subscribed to the channel for more, or click right here to catch more insights.